Holy crap, NEO stock is down 7% pre-market. The whole entire stock market is crashing. You can see Nasdaq down almost 4.5%. The Japanese market down 12%, whopping 12%. And guys, there's something that you must not do, all right, during this recession fear or tech correction, whatever you want to call it, whatever that's going on. NEO is going to, 52-week lows, at around 52-week lows. What the hell is going on? There are some things to note. Some people are saying that the correction in the overall markets is because of the data coming out, the US data being kind of weak, stoking fears of recession. All right. So they've been weak. Data has been weak for actually several months. And before, bad news used to be good news, but now it seems like bad news is bad news, and it's causing the stocks overall to crash. And another reason is because of the insane valuations that some of these tech stocks have really gotten. For example, Nvidia going to multi-trillion-dollar company, 3 trillion, and then now it is correcting, and you can see Nvidia down 12.5% in pre-market today. It formed this nasty double top and then has since broken below that trend line, and it's just going down. It seems to be sinking with no end in sight. There's no telling when this correction is going to end for Nvidia stock. Likewise for Apple, it was just revealed that Apple had great earnings, but Warren Buffett sold almost half his stake in Apple shares, and that has really also caused a massive crash of -7%. Absolutely insane. But could Chinese stocks such as Alibaba, could they be immune to the recession fears? This is very interesting because if you take a look, even though Alibaba is down, NEO is down. And if you look at the Chinese market in general, it's down today. But this is more like sort of following the horse, so to speak. But it's not crashing as much as some of the other markets are crashing, because China has never had that kind of insane inflated tech valuation that the US market has. So even though we are approaching 52-week lows for NEO stock, all right, I painted this arrow. And this used to be because of this wedge, from here-ish. And then that would kind of push us down. And we could potentially see it go down to 3.4-ish. Yes, but there's something very critical to remember. This is indeed a support line because it's 52-week lows. And we could see a bounce from here and then just bounce up. And, NEO is very, very oversold. Like, I don't have to really exaggerate that aspect. But there's something that you must not do with NEO stock, and that is the fact that during these crashes, during these kind of rapid move down, all right, what ends up happening is people have their stop losses, and then stop losses get taken out. And then what ends up happening is people get stopped out, and then the stock bounces back, and they end up missing out on the rally. They sell at a loss due to the stop loss, but then the stock bounces back after their stop loss has been taken out, and they're out of a position. I'm not saying that you should remove your stop loss, but definitely be careful with your stop loss. And most importantly, all right, be careful with margin, because we've heard so many stories of people who've, bought NEO stock on margin, and then, when the stock came down, they were forced to sell, and then they miss out on the rallies up, which is so unfortunate. But going forward, as nasty as this seems, it seems like just a correction. It seems like just a healthy correction of the stock market and nothing too out of the ordinary. It's again mainly due to these tech stocks. Like, look at Nvidia. Since the start of the year, all right, has pretty much almost 3x'd since January. All right, that's just insane. That's insane. And it is very normal for it to correct a bit or even some more downwards. And that would be very, very healthy correction. And for NEO stock going forward, we are extremely oversold. We could bounce, but at the end of the day, I believe that Chinese stocks are a little bit more immune to these recession fears. With that said, these corrections could be over before people even realize. All right, we got this massive quick move down, and that could just be it. That could certainly just be it. Okay? Because if you look at the overall markets, I mean, it's looking like it's hit support, and it's quite extremely oversold. And when it's oversold, buyers do tend to step in. All right, buyers do tend to step in, and look at how far this has dropped. And this is pretty much a very strong level of support, 17,000 for Nasdaq. And it looks like, unless we get even more bad news, which I don't think, I think it's all priced in, then we might see it bounce. All right, bounce off of this, and we might head higher with that in mind. All right, and you gotta also remember that what NIO's doing, all right, they're going to become a $1 trillion company in the future with all the stuff they're doing. They're the first company to make their own chips here in China, which has previously been held impossible. They've made their own, basically the next Android, with their own SkyOS, their own code, for basically their own software for cars, which is absolutely incredible. They're also going to become like Microsoft, but for cars. Absolutely insane. But keep in mind that they are spending so much money on this, right? Also, they're spending so much money on Envo. They're spending so much money on store deployment for that as well. And we are going to see expenses really, really pick up. And that could really hurt when we get earnings dropped in September. That could even push us down further. Okay? And this is just honest warning. I'm not like trying to create fear or anything. It's all very logical. You guys got to understand, right? My channel is all about being logical. All right? They're doing great stuff, but it costs money. There's nothing wrong with that. But we are definitely hitting some very strong support, and we could see it bounce up more, or we could see it bounce up. But I am warning you that, with what I'm seeing here on the ground, lots of cash expenses, spending a lot of money. So that is something to be careful of. They're also working on factory number 3, factory number 4. Factories cost money to build, and they're working on 2 factories at the same time. You add that together, are they going to be spending a lot of money? The logical answer is yes. Okay? So even though we got this massive sell-off, right, we could bounce, but also be careful of the cash expenses going forward. And long-term, we're definitely going to go back to double digits and maybe even triple digits, super ultra long-term, 10 years down the line. I'm expecting $650 per share 10 years down the line when chips roll out. They license chips, they license battery swap, they license out their software, and they got 3 brands going. That's the bullish scenario for $650 per share. But having that said, short term, they're spending all that money to make that happen, so we could see more downward pressure because of the cash situation. But this is, of course, very logical analysis, and I'm sure a lot of you guys will agree with me on that as well. So, yes, it is crashing, but everything's crashing. Everything. All right? Everything is crashing. And if your long-term mindset, you have a long-term mindset, you would be buying at these prices. Okay? If you have a long-term mindset. Of course, not financial advice. As always, stay safe, stay healthy. Peace out.